Buying slash selling stocks consists of acquiring and relinquishing shareholder rights for a particular stock. Now, if you want to buy a stock, then you have to have someone on the other end that's willing to sell those stocks. But what if I told you guys that there are secret forces working behind the scene? Secret forces behind the scene. And this third party you never get to see. Okay, maybe I'm exaggerating a little bit, guys, yeah? But these people, they do make money off of us and off of each and every transaction that we make and the mistakes that we make in the stock market, which, let's be frank, is a lot. So keep watching, guys, if you want to find out what market makers are and also the number one thing that they like to do to us investors.
You know what you're watching. DS Learning Finance. Whoa.
Simply put, a market maker has two purposes. One, to make money off of you, and two, to make a stock more liquid, i.e. make it easier for you to conduct transactions in a stock. And that's all that they really do, but the way that they do it is a pain in the neck, to be honest. So let's say we wanted to buy Tesla stocks. Tesla is expensive, guys, so this is just for example purposes, okay? Tesla is roughly around $280 per share for one particular stock. Now this may fluctuate depending on when you guys are watching this video, but basically at this time of recording for me, it's expensive, okay? So let's say we wanted to buy Tesla stocks for $280. So $280 for Tessie Babes Tesla, yeah? Cool. If we wanted to buy 1,000 stocks, well, actually 100 stocks, that will take us to $28,000. Wow, those numbers are getting very big. As you guys can see, it's not cheap at all. But it just doesn't stop there. As much as I want to buy those 100 stocks of Tesla, I need to find someone or group of people in the market currently that have a similar sort of number for Tesla and for a price that are willing to sell it for a price lower than the price I'm willing to buy it. So as me being a buyer, that's my bidding price, the price that I choose to buy those stocks for. And the seller will be the asking price, the price that they choose to sell those stocks for. The difference between the two, the gap, is called the spread. And it's this spread, this gap, guys, that market makers make their money from. Each and every time you make a transaction in the stock market, regardless of whether you're buying or selling stocks, market makers make their money. But as much as I'm criticizing them, guys, they do serve a really good purpose, as I mentioned previously, which is to make stocks more liquid. Without market makers, you would struggle to sell your stocks. And for smaller stocks, it will be damn near impossible to even sell stocks, basically. So they are a necessity in the market. There's no point in identifying a good investment opportunity if you can't sell the stocks when you want to make money from it. Don't make sense, guys. Or you have to wait for the next lunar eclipse before you can buy stocks in that particular company. You don't want to be waiting for illiquid stocks like that. And that's what market makers try to do. They try to make stocks more easily accessible. In the grand scheme of things, we know that we need market makers for stocks, basically. And it's this necessity that they exploit and fully utilize by making money off of each and every transaction that we do. But if there's anything that I want you guys to take home from this and what market makers do, it's this one term called tree shaking. I know this may sound like a new term, guys, but if you've been investing in the stock market for a while, I guarantee you, you've at least seen this once, if not actually fallen for it several times in the stock market. So it definitely happens, people, and very, very often. And it's basically where market makers dramatically decrease a stock share price with no explanation, no valid reason, and then gradually reduce it afterwards, followed by an increase back to where that share price was originally before. As the analogy suggests, they're shaking the tree, which is basically the stock share price, and seeing if they can try and trick the doubtful and fearful investors into selling their stocks so that these market makers can fill in their big orders. Put yourself in the market maker's shoes. Like, let's say you're a phone manufacturer and you've got 1,000 phones to sell. What would you rather sell? Would you sell 1,000 phones to one big company, or would you rather sell one phone to 1,000 customers? You're going to take the former rather than the latter, I hope. And it's just because it's just easier, stress-free, time efficient. And so you're going to want to take that route just because it's easier for you, basically. So that's what market makers do. So naturally they're going to want to take on the big orders because they know they're going to make money regardless, guys. Going to make money regardless. It's not worth all the hassle going to Tom here and then maybe Janet there and then maybe Bob down the road. Nah, it's not worth that. I want the easy route. I don't know about you guys. And that's ultimately how market makers see it. But it is the strong-rooted and confident investors that are able to recognize that this tree shaking is happening, and it's those people that know that that's the most important time to hold on to your shares. And so it's those people that are able to test the stand the test of time with tree shaking. You've got to be confident in your investments. You've got to know that, okay, if there's no information that's been leaked, there's no news, no report, no sort of reason to justify why the share price has dramatically dropped, then it's probably some tree shaking that's occurring. And just a little tip for you guys, yeah, make sure that you're cautious with your stop losses whenever tree shaking is occurring, because what market makers will do is that they'll look at the share price and they'll guesstimate roughly where the majority of investors will place a stop loss at that share price. And so for me and a lot of investors, by default, you typically place a stop loss at 20% lower than the price you bought it for. So what market makers will do is that they'll see the share price 80%, that's where they'll drop it down to, and then act accordingly, because they know they're going to trick you and Bob down the road. So naturally they're going to want to target the regions where they can acquire the most stocks. So it's up to you guys to spot this and make sure that your stop losses aren't too high, because you know that they're gonna just be coming to basically kill. They're gonna be coming to acquire stocks, guys, and they're not playing around when it comes to this sort of thing. They don't care who you are, they don't care if you're sleeping, they don't care. They'll just come and take your stocks from you just to fill their big order and free up more available stocks for themselves. So it's up to you guys to make sure that you're ahead of the game. Just to round it all off, guys, market makers are humans just like you and I. So the better you are actually getting into their state of mind and understanding how they behave, the easier it's going to be for you guys to see these traps and overcome them, to jump over those hurdles. So it's ultimately just about understanding people and their reference, their perspective on things. That is essential. So I hope you guys have enjoyed this video about market makers, what they do, the different various ways that they like to go about doing their antics, and just how they just like to make life hard for us investors. Yeah, I hope you guys have realized it's peak for us investors in the stock market. But if you guys have enjoyed this video and or have found out some more information on the stock market that you can now take and carry with you forward, guys, then make sure to like this video and make sure to also subscribe to my channel and hit that notification bell, because there's only going to be more content like this coming out, guys, so keep your eyes peeled. It's your favorite YouTuber, guys, Dami Solari. I talk about stock market investments, I talk about property investments, financial management, to giving you guys that consistent content, you know, before you guys can go about doing whatever you're going to do for the rest of the day. Say with me, like, subscribe, and share, people. What? DS Learning Finance. Whoa! Bye, guys.
Whoa.